Hi, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, and welcome back to The Pulse, where we take a month-to-month look at what happened in the economy and the capital markets to make better decisions in your business and with your investments. Let's start with the highlights. Markets are off to a strong start with optimism about the economy in 2025, driving gains in stocks and commodities. Rising consumer spending and small business confidence are supporting of that optimism. Now, AI investments are reshaping industries. Recent CapEx announcements from Microsoft and Meta signal this should be a big year for AI spending. And finally, keep your eye on weakness in China, as bond markets are concerned about the economy. Now, let's take a deeper look at the data, see what else we can learn. The markets have started 2025 on a positive note, with equities showing strong performance across the board. Global markets were up nearly 4%, led by developed international markets. And in the U.S., the more cyclical Dow Jones and the equal-weight version of the S&P 500 highlight a potential broadening of performance beyond the tech-heavy Magnificent Seven, reflecting optimism from better-than-expected earnings. Now, bond performance was stable, while commodities like copper and oil rose on expectations of a stronger economy. And Bitcoin's gains continued on hope for the Trump administration's approach to cryptocurrencies. We are in the middle of fourth quarter earnings announcements for S&P 500 companies, and about 80 companies have reported. Of those, better than 80% reported better than expected earnings, and about a third have reported better than expected revenues, while fewer companies have missed earnings estimates relative to last quarter. Bond investors are factoring in fewer rate cuts than before. The curve shows that over the last quarter, from the green line to the blue, longer-term rates have been rising because expectations that the economy will stay stronger and that the inflation rate will decline slower than previously thought. In other words, expect the interest rates to remain near current levels. Economic activity is accelerating, reflecting stronger consumer spending and business investment. The increase started shortly after the election, as uncertainty around the economy presented by the election dissipated. As a result, small business optimism is surging, reaching its highest level in years as the election has reduced uncertainty. And this is a huge positive for the economy. This more confident outlook by business owners reflects a kinder regulatory environment and a healthy consumer. They can consider your expansion plans, including investing in growth and in strategic hiring. Consumer spending online during the holidays hit a record $241.5 billion, growing nearly 9%. Now, consumers were willing to spend despite higher prices. We're seeing accelerating rates of spending, which has averaged about 6.5% per year over the last 5 years. And debit card transaction growth rates are accelerating as well, as consumers are still spending even as prices remain elevated. As we've noted in prior editions of The Pulse, consumers are more price conscious, even affluent ones. If you're managing a consumer-focused business, now's a good time to focus on capturing that spending through value-based promotions and improving customer experiences. Same-store sales have been growing at around 5 to 6% annually, consistently outpacing inflation. Now, this means customers are spending more in real terms, not just due to the price increases. For the right products and services at fair prices, consumers are continuing to open their wallets. Speaking of opening wallets, AI spending is set to top $250 billion this year, with companies like Meta and Microsoft investing heavily. We believe in 2025, businesses of all sizes will more aggressively look into how to expand their AI capabilities, how they can streamline operations, deepen customer relationships, and generate a return on investment. We're keeping our eyes on China, as China's 10-year bond yields are near record lows, even lower than during the global financial crisis and early pandemic. The market is increasingly concerned about China's economic weakness and deflation from the country's real estate struggles, its aging demographics, and weak domestic consumption. Now, what this means is that Chinese companies are likely to increase exports to grow. If you're managing a business with Chinese competitors, anticipate a surge of lower-priced goods and intensifying competition. To sum up everything from today, here are the key takeaways. Markets are showing optimism, creating opportunities for growth. Consumer spending and small business confidence are rising, signaling strong demand. Big investments in AI may start reshaping industries. Meanwhile, China's slowdown could mean tougher competition globally. With that, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, And I'll see you next time with our next edition of The Pulse.